Hello and welcome to this session brought to you by the Academy of Practical Accounts in conjunction with your institution. In this session, we look at assets and liability schedules. This should not be, well, we can put a stroke in there. Reports or schedules, basically to have a closer look at them. Now let's get to our device. We get to our device, we go to our mini year-end reports checklist, and we want to see this report C1. Let's see if we can get those reports. Now we're looking at balances from 201. So let's take a screenshot. Balances from 201. And that's what it could be like. Okay, let's copy that. We'll paste that here. So ideally, we're going to try to match this to what we see on the other reports and to try to verify how they are generated. So this is our mini year-end reports checklist. Now we're looking at assets and liability reports. Now we've got nothing in the H section because the business doesn't have fixed assets. The only asset that was bought was written off as an expense, simply because we're following the cash accounting method. Now let's look at the stock accounts quickly. Stock accounts quickly, there should be 1500 there. That 1500, yes, let's see. Yes, that 1500 is coming from the stock account. Okay, let's go back. So that's a detailed report for stock as far as the accounts are concerned. Now let's see. After stock, we scroll down to the bank accounts summary. Now the bank accounts should be showing 4364. So we've got the summary account. We've got the summary and reconciliation. Okay, let's just have a quick look at these. This is a summary, and it's only the bank account. Among accounts 205 to 211, only 205 had transactions. Only 205 had transactions, and the closing balance is 4364, which agrees with what we see there. Now let's look at L2. Now L2 is the bank summary and reconciliation. This one, you remember, we reconciled this one against the bank statement. Okay, this is what it looks like. It should agree 4364. And then let's look at L3. This is L4. L3 is the bank statement, and this is L4. So you can see that they all do match. Where does this come from? How do you get to this? Now, this one is a complete bank account from opening balances up to year-end adjustments, if there are any. So if you want to verify, you can sum up these and you find that you'll end up with 4364.5 as the closing balance in this account. This is how the figures are supported. Let's go back. Now let's see. Go back again. Now we're looking at the cash account. Cash account. We're going to look at two reports. We'll start with the cash summary. Cash summary, if you recall, we did reconcile this one as well. And we confirmed that the cash available was 477, which agrees with that. And this is what it looks like. Now let's move to M2, which is the detailed cash account. And these are the transactions on that account, all the way from the balance brought forward to year-end adjustments, if there are any. Now, adjustments are normally done for income and expense accounts, not asset and liability accounts, but income and expense accounts. Okay, so this is the M2. We have verified, and we can see how this 477 was generated, starting all the way to all these. There is full accountability. And let's go back again. Let's see what is below here. We've looked at the M reports. Now the N reports. This is the creditors summary and reconciliation. Let us look at this Q1 briefly. This is where the £30 comes from, and this is self-reconciling. So it shows who the £30 is owed to, and this is the summary of the control account. And that's it. If we like, we can go to the detailed reports. This is the creditors control account. This is the creditors control account. Let's go back and we can go to the individual creditor accounts, also showing £30. So there is plenty of support for that figure. And then next to that, we should look at the 844. Where does it come from? No, the 340. The 340 comes from long-term liabilities. Let's look at the loan and hire purchase. Loan and hire purchase. Now this one was not reconciled. Let's see. We don't have a loan statement. Yeah, we didn't have enough time to cater for that. But ideally it should agree. And when we type in minus 340, oh sorry, there should be a 0. That difference disappears. Okay, so this is where the 340 is coming from. This is the summary report. Now we can go to the individual accounts to see the detail of transactions on the individual accounts. This is the balance brought forward, this was paid, and this is the closing balance. That's how accounting should be done, with detailed reports. Now and then we'll look at 844. Okay, we've finished with R. We look at S reports. Credit card summary. Now let's go straight to S3. S3, we've got the 2880. 2880, which is from account 254, tax outstanding. This is where it comes from. That was the opening balance, it was paid, and this is the closing tax outstanding. And then this was, of course, temporary liabilities when we were recording opening and closing creditors. Opening creditor balances. And this is the credit card account. This is the source of the 844. Okay, this is where it's emanating from. Okay, now let's go back. Now we should be scrolling down to the capital accounts. We're looking at T1. T1, we have a balance brought forward of 2324. That one there. And then we have capital added of 400 on account 275. That one there. Yes, and then let's make a final look. We'll look at the tax account. Yes, the 2880. That 2880, yes, is on this tax unpaid account, account 283, supported by document 21. And then finally we've got the drawings accounts. So we have only a single account here, account 286, which has got the balance of 12,000. So that is the end of having a closer look at assets and liability schedules. In case of any question, please send us an email, find us on Skype or WhatsApp.